Okay, we're back again, a different panel. I must tell Mr. Marchant to allow for rescue breaks between these panel sessions so that people can have time to go and get coffee, etc. We're going to talk about the macro developments that are hugely relevant to everybody in the room in terms of what the major countries that affect what OFCs do and the major international agencies are doing and what they're thinking of doing. And there's been significant overload, as you all have seen, in the international media and the political arena, which seems to be accelerating in terms of, some would say, lunacy, when everybody seems to be coming up with a new plan which the politicians and the media then wave around, and then somebody comes up with another plan, and you end up rather confused, twirling around, wondering whose plan is where, how are they going to fit together, and whose plan is going to be preeminent. It is a little like the competition between different manufacturers of videotapes and DVDs and CDs, and it would be good, I think, if we could move towards a common standard and some certainty in the world so that individuals and corporations could get on with their lives and plan them accordingly. The gentleman who I want to nail is actually in the room here still, and I wonder, Gonzalo, could I ask you if you wouldn't mind coming up and sitting on the panel with us, because I think if we get the question and answer, Gonzalo has been very involved as CEO of Cayman Finance in some of the you can get a late checkout, Gonzalo. You just go to the beach. We have got here today, we're very fortunate to have, because I think it's one of probably the first occasion where a very, very senior member of the Cayman Islands government has appeared on a panel here in his official capacity, and that's Dr. Dax Basdeo, who is Chief Officer in the Ministry of Finance, who has been critically involved in many of the matters about which you're reading in the press in terms of where the UK is going, where the US is going, where the EU is going. And he will start us off by giving us an update on where he sees these things are and where they may be going, to the extent he may have to be somewhat discreet and use code language, so you'll have to listen very carefully to what he says and also listen very closely to the silences. And next to him is Professor Andrew Morris, who's a professor of law at the University of Alabama Law School. He's a regular visitor to Cayman. He has also become a renowned expert on OFCs, and a paper that he has jointly written with one of his colleagues at the University of Alabama is shortly to be published, which analyzes the development of the Cayman Islands as an offshore financial center since the 1960s, which has some fascinating research both in the UK and in Cayman as to the policy decisions that were made by both governments and as to how Cayman reached the position that it is today. So I've asked Gonzalo Jales to join us as well, because he has been very involved as CEO as Cayman Finance, and you heard him speak eruditely about banking matters. Well, he's going to be available to speak equally eloquently about G8, G20 matters as well. So without more, I'd like to ask Dr. Basdeo Dax to start us off by giving us the macro view from the Cayman Islands government perspective.
Good morning. Thanks, Tim. Let's see. Starts off with a bit of background. I think the last day or so has certainly given us a lot of context for the discussion that's been happening in the media and between governments in the last few weeks, last few months. So I'm not going to spend too much time going through some of that context. But needless to say that there's been a lot of activity, a lot of interest playing out in the global stage right now. I just wanted to mention that, sort of to Tim's point about multiple standards, there are various agenda out there in terms of various groups. Each one perhaps slightly different, some more so than others. But the G20, in terms of overall body, having quite a defined program, as well as the G8, which is the subject of this panel. But also want to mention the EU in terms of the work that they're doing on the issue of taxation and international tax administration, and the UN in terms of their programs. On that slide, I have a reference to the G0.7, which is a reference to those countries that have committed to putting 0.7% of their national incomes into development assistance. I think the point about poverty reduction is an important one to understand as a driver for what some of this debate actually is. So focusing in particular on the UK and the UK's G agenda, Prime Minister Cameron earlier this year in January outlined the 3 T's for his agenda: trade, tax and transparency. And in that speech you can quite clearly see the references to how to improve the situation in less developed countries. The transparency and tax matters in particular are designed perhaps to allow less developed countries to be more self-sufficient in their tax administration and to be less reliant on development assistance. So given that sort of agenda and that background, certainly in communication with all the overseas territories and Crown dependencies, this agenda has really come forward. So towards late March, we had a meeting with Her Majesty's Treasury and Revenue and Customs, Foreign Commonwealth Office in London to discuss the G8 agenda, what was expected from the UK and how the OTs and CDs could be a part of that process. And in that outlining, certainly UK FATCA as something for us all to be a part of. Initially mention of the OECD Multilateral Convention on the Mutual Assistance in Administration of Tax Matters. The name is quite long and I often forget it. Also the FATF in terms of revised standards and some discussion on anti-corruption. Following that, in early April, you noted the UK and G5 launching a multilateral pilot for the automatic exchange of information. This is a sort of a key announcement, and since that point, certainly the UK is saying to its OTs and CDs, this is something that you should all be a part of as well. A subtle shift in terms of focus, but an important one nevertheless. To understand that, and what's sort of driving perhaps some of the UK's agenda is understanding what's going on in the EU. Certainly in the last few months, the EU has come forward with a number of documents, a number of statements, suggesting what it intends to do in terms of protecting its own economies in relation to the fight against tax fraud and tax evasion. Most notably, the action plan published in December of last year. I think a key point to note is the ECOFIN meeting in 13th of April, and behind the scenes a lot of discussions on tax matters, and in the press perhaps a lot of anti-type statements made by various EU members against each other, most notably Austria in terms of criticizing the UK for its OTs and CDs, and the response from the Chancellor as well in terms of those statements. But in terms of those discussions, you see perhaps a tension between the various EU countries in terms of who has the most appropriate agenda, how this issue in terms of fighting tax evasion, tax fraud will go forward. So I think that the other thing to also know is that the EU agenda, which has another ECOFIN meeting very shortly, and a council meeting towards the end of May, comes before the UK's meeting in June. And so a lot of the discussion going on behind the scenes is in terms of who has the most appropriate agenda and who's taking forward these initiatives. Also in terms of looking at overall standards, just to note a very substantial shift in the various statements being made by the G20, where we see from November of last year still talking about the information on request, to April of this year, now speaking more about the automatic exchange of information as the new standard. A very distinct shift in language being used, certainly an indication of where things not only are going, but have come to. Also to note, just in terms of the various other bodies involved in this area, of course the FATF and the revised recommendations certainly driving the discussion on beneficial ownership and how that in particular affects less developed countries. But in particular also the OECD and the work that's being done on base erosion and profit shifting. If you look at the last decade plus in terms of the tax agenda and the two components of it, tax transparency and exchange of information being one key component, the second one being this idea of harmful tax practices, and the report on BEPS, base erosion and profit shifting, getting towards the latter of those two issues. The action plan that they intend, the OECD intends to publish very shortly on base erosion and profit shifting very soon, shows a very accelerated agenda in terms of addressing the issue, which is related to the issue of tax avoidance. And also to note that in terms of EOI, exchange of information, perhaps the agenda on that issue not coming to a close, but certainly coming to a certain milestone with the publishing of transparency ratings expected toward the end of this year. Again, if you look at the G20 statements, you'll see references to these lists and perhaps what can be done with them. The EU itself, in terms of its action plan, also makes reference to use of lists in terms of various actions by member states. So given that context, it's been very interesting to see the responses from various jurisdictions. Luxembourg is somewhat softening its stance on transparency, Austria sort of defending its position. In terms of the OTs and CDs, all coming out in support of the UK's agenda, to various degrees, all supporting FATCA, some of them are also supporting the G5 multilateral exchange of information pilot. Cayman in particular was one of the first to come out with a statement suggesting that we were supporting the UK's position by a few days, more so because we were in the UK at the time discussing various issues on FATCA with them. But when the request came for us to be more supportive of various aspects of the UK's G8 agenda, I think the important point that I would want to stress is that from our perspective, the Cayman Islands have had a long history of being very supportive of international standards and being very compliant in terms of our role in the global economy. And in having quite close discussions with our private sector, and Gonzalo in particular, this was quite an easy decision for us to make in terms of how to move forward and how to be supportive, because we see this is the way the world is working, the way things are going, and therefore sort of part of our responsibility to be a part of it. So again, what's driving some of this debate? I think the language being used in the media and reflecting of public opinion is one that's driving sort of many of the political statements and giving a lot more attention to this issue. In the statements, various steps, you'll see the issue of poverty versus inequality coming out quite strongly on the part of NGOs in particular. Who's going to be a benefit here? Is it the taxpayers in the various jurisdictions, or is it going to be those in less developed countries? The line between evasion and avoidance being blurred, the shift now is more towards looking at avoidance. The various scandals have come up, certainly calling light to this issue and perhaps leading to even more negative characterization of offshore activities than has been there in the past. And perhaps not a real very clear idea of the scope of this as an issue and how to take the next steps to address it. But the very emotive language behind a lot of releases and a lot of statements suggests that the heart is more driving decision-making at this point than the head. The absence of evidence and fact-based decision-making is something I think is a risk to be concerned with in terms of developing the next step, the new standard. And certainly, one of the things to note quite closely is the issue of who has sort of the fair share of the blame in this instance. We've seen a shift away from sort of the usual players and the financial centers as being the cause of these problems, to where some criticisms have been leveled against the various governments, their tax codes, what loopholes are there or not there perhaps. The multinationals, the Googles, the Apples and others who have come under question, and certainly some of the public opinion polls that have been conducted suggest consumers are less tolerant and less likely to do business with those kinds of companies who take advantage of these tax strategies. Service providers have not been exempt. I think Prime Minister Cameron also noted the traveling caravan of accountants, lawyers and other service providers who contribute to these activities as sharing part of the blame, and of course the offshore centers, who help to facilitate some of these transactions. The question is then who benefits? Will it be the taxpayers in the various jurisdictions, in member states in the EU? Will it be those in developing countries? That remains to be seen. I think what is quite clear is that there are various agenda out there, various standards being proposed. Perhaps the UK and the G5 have to jump on things at this point, using the US FATCA model as a base. Hopefully we can get to the point where we have that one standard and therefore reduce the cost overall for compliance on a worldwide scale. All right. Thank you very much.
Thank you very much, Dax. I brought in a new panelist, and I'm going to ask him to make a few comments following from Dax's as to the perspective of the private sector in Cayman, although it may be not dissimilar to the views of the private sector in other jurisdictions, on their views and participation and reactions to the issues and procedures that Dax has outlined to us. Gonzalo?
Thank you, Tim. Thanks for the surprise. The private sector position in Cayman is pretty straightforward. There's absolutely full support for transparency. Cayman has been engaged in signing TIAs and following international standards for a long time. We've engaged in or committed to IGA 1 US and then UK. And as I said yesterday, we were the first ones pushing to be part of this pilot of implementing a FATCA-like multilateral exchange of information. Where the private sector draws the line and has a concern, I would say, and take this as a personal opinion based on discussions with members, is we are not prepared to become collection agents, policemen, or policy makers for other countries. And we have a concern when people mix the words avoidance and evasion, which is something we did here yesterday. Apparently now all kind of avoidance is a bad word. Well, if you are a U.S. resident and have a mortgage in your house and investment at the same time, well, you are avoiding taxes. That's effectively what you are doing, because there's no other reason why you would do it, or very little reasons why you would do it. So not all avoidance is bad. It is quite clear to me there are a couple of rotten apples there. And we see companies named. What we want to do is we want to give the countries all the information, and then they can set up the laws, the regulations, and they can enforce, and we will help them enforce. But we can't start guessing if the transaction is good or bad avoidance. We can't become educated in tax codes of 80 countries around the world, or whatever the number is. We will provide all the information, and then it's up to each country to draw the regulations and enforce them with Cayman support. That's pretty much it.
Thank you very much, Gonzalo. My slides. Yes, sorry, I was number 2. I'm now number 3. Aha, good. Dax, I hope you can all read it. It's nice and large. Dax has addressed some of this. I just wanted to put this up, not because I'm going to discuss it, but just as an aide-memoire to everybody as to the alphabet soup of who's in the action here and how it goes back a long way. And most of you in the room will recognize the players. Don't forget that the United Nations itself has its own tax policy division and would dearly like to become a global tax collector, collecting everybody's airline ticket taxes, financial transaction taxes, and anything else you like, so that you can all have a global tax identification number, etc., etc. Hopefully that's not likely to happen anytime soon, but don't be fooled that there are people in the UN who think about these things and would like it to happen. And there are, as we've seen, the international group agendas, i.e. the political group agendas that Dax has talked about, and there are a myriad of them, you know, G7, G8, G20, and lots of subsets of the international agencies, and I include the IMF, the OECD. The particularly active players are, of course, the OECD in terms of the tax field, but their subsets, the FATF is sort of involved through the money laundering stuff, the Global Forum, which is this body, which is again a subset of the OECD that is conducting peer reviews to see if people are effectively implementing tax information exchange agreements. The regional agendas of the EU Council and Commission, we heard about those. The national agendas of the US, the UK, and the individual European nations. Canada has recently joined the party. We know the Indians are levying taxes like mad on offshore transactions, Viz, Vodafone, etc. The NGOs are very interesting because they've become very active, and Dax touched on their participation in terms of looking at the allocation of tax so that developing nations get a larger share of it. I'd like to talk about that a little bit more because I actually see that as a real tension that maybe breaks some of this apart. Interestingly, some of you may see the reports that charities like Christian Aid publish criticizing offshore financial centers, criticizing multinationals. They tend all to be written by the same people who come from tax justice networks, and you may have noticed a similarity in the hysteria that's included. So you need to look at them with a pinch of salt, particularly bearing in mind that charities themselves are tax exempt and charitable donations constitute usually a legitimate tax deduction. So it is rather ironic that those people would themselves be taking advantage of tax preferences. One of the things that has got kind of lost in all of this is where it all started. And just to go back to those of you who are old enough to remember, this all started with drug running, money laundering, serious crime, and cooperation agreements between the various countries. Apparently, as far as I can see, drug running is just as much a problem as it was when this all started, but nobody much seems to talk about it. We've moved on through these agreements to tax, and it started with tax fraud and tax evasion, and we've now got to the point where tax avoidance, even if it would appear legal, even if it's aggressive, is going to be considered to be on the wrong side of the line. Combined with that, we have had global standards developing on regulation and oversight. It all sort of came to a head recently when the budgetary crises finally came home to rest and governments decided they had to look around to see how they could improve their tax collection and tax recoveries, combined, of course, with statements about reducing government expenditure and waste. We can all take with a pinch of salt the second comments about reducing government spending and waste, because that's usually very difficult to achieve, even if there is the political will to do it. And we've got to the position now where, as we've heard, that transparency, which is an easy thing to say but somewhat difficult to define and implement, and together with that, exchange of information on an ever-increasing scale. And this is kind of how it's developed. And where we are now, as Dax has indicated, the OECD was very proud of itself until it realized it was about to write itself out of existence with its program of moving towards tax information exchange agreements, bilateral, multilateral, together with its more traditional double tax agreements, or DTAs. And everybody was merrily sitting down and saying, whew, thank goodness that's over. There's only going to be exchange of information on request, which of course, and I'm not sure if Dan Reeves from the ex-IRS is still here, but we know the problems, the practical problems of that is you can only make a request for information if you know what you're asking. And that's been something of a stumbling block until the gold mine of UBS et al. Opened up some of the information that enabled the request to be made in a meaningful fashion. And suddenly, out of the blue, we had the OECD saying, exchange of information on request is good, it's fine, we're happy with it. And their political masters and the media started saying, it's not all right, and we think that we should be going to spontaneous or automatic exchange of information. "Ah," said the OECD, "we like this idea," and they rapidly moved sideways and said, "Of course, we would be very willing to help you develop this program," because they suddenly realized here was a marvelous way to continue their work on the tax policy field and indeed to expand it. And the current head of the tax division, who's a Frenchman, needless to say, called Pascal Saint-Amand, who, by the way, doesn't pay any tax on his OECD salary, but people get tired of me saying that. He gave a fascinating speech at the Oxford University Business School in the middle of April in wonderful Gallic fashion. He had three days of beard, and it was wonderful, a silver fox. And he basically said, yeah, we recognize this is an opportunity for the OECD to take back control of global tax policy. And this is what we're going to do. And we are delighted to have this new task, and we're going to call it BEPS. And BEPS is hugely important in terms of the corporate side of this, multinationals. And it's, as its name suggests, totally meaningless until you drill down and see what it's all about. But BEPS, I think, is probably going to be the most important policy development in the tax field that we've seen for some time. And some people would say it simply builds on refining what transfer pricing means, how you avoid double norm taxation, which vexes these people, i.e. using hybrids, and the things that have been fully exposed in the international media of Dutch sandwiches, Irish sandwiches, double sandwiches, and you've all read the analysis of how Google is structured, how Starbucks is structured, how all of these international icons have been structured. Of course, other companies that are lower profile have been engaging in somewhat similar and legitimate planning for years. All the multinationals like Shell Oil Company, BP, the mining companies, any company that was dealing cross-border has for many years had in place appropriate structures that haven't received much scrutiny by the press that engage in legal and legitimate tax planning. The problem is that the boundaries have shifted, as Dax said, and that what was considered legitimate tax planning and tax minimization or tax avoidance is now considered to be unacceptable. And part of the process that's now going on is to bring greater transparency to the way in which these structures are being established, so that tax authorities and their political masters can get a better idea of how they want to tax them. And you may have noticed a subset which is called country-by-country reporting, which has been pushed by Tax Justice Network and the NGOs as a method of ensuring a greater share of the tax take goes to developing nations. And the idea is that if multinationals are required to report a set of accounts by each country where they do business, people will have a clearer idea, at least they think they will, as to where the profits lie and where the profits should be taxed. That's the theory of it. Where I mentioned the tensions that I think may be built into this move, which Dax identified it in terms of, are we helping developed nations or are we helping emerging nations and attempting to reduce or alleviate poverty, or are we actually maintaining financial imperialism? And I'm afraid I tend to the former, not the latter. That isn't to say that I suspect everybody in the room subscribes to the fact that reducing and eradicating poverty and sickness and illness in poorer countries is a highly desirable goal. What seems to be missing from the debate right now was the element that was part of it a few years ago, which is the corruption element and building civil society. It's fine to talk about allocating tax in a different way between the various interested parties, but if you don't have an agenda that involves meaningful improvement of civil society and elimination of corruption in these countries, simply reallocating the tax bite isn't going to do it. It's simply going to give more money to corrupt leaders of these countries to abuse their countries and their countries' assets, usually by purchasing expensive cars and keeping them in London and buying expensive apartments and houses in London and other major onshore jurisdictions. So I think that part of the debate needs to be borne in mind, because one of the things that came out of the debate, and it's worth watching because it's up there on YouTube, the various speeches that were given at this conference at the Side Business School in terms of how you develop international tax policy and how it relates to multinationals was fascinating, the people who were speaking. And the speaker, Director of Tax Policy from BP, British Petroleum, or actually Beyond Petroleum, as it liked to be called, was very forthright. He said, look, you know, we will adhere to the laws, tax laws and other laws of the various countries we do business. You just have to tell us what they are, and we want certainty. And if you tell us we should be paying more tax in Nigeria or paying more tax in the United Kingdom, and you define a set of laws and regulations that provide for that, and they can be administered, that's fine, we'll adhere to them. And I think that's what a lot of people and companies want. They simply want certainty from their tax laws and tax regulations so they can apply them. And I think it is unrealistic to expect BP or Apple or Google to then also turn around and say, if the tax code allows us to do X, Y, Z perfectly legally, we're not going to do it because somebody's telling us that that's unfair. The way to deal with that problem is to develop a set of tax laws and tax codes that do what you want to do and are applied in a fair and legitimate way, and that the courts can enforce. You can't ask a court to say, you're not paying your fair share of taxation, this is what you should pay. I mean, that is the last result that we want, and is extremely dangerous. And those who call for paying a fair share need to think very hard about what they actually mean when they come out with that term. It's an easy emotive issue, you should pay your fair share. But you have to reduce that to a set of laws and regulations that can be administered and enforced and that people can understand. And if you don't do that, you are actually abrogating the rule of law, and that's an issue that I think most of us feel very strongly about. So the things that I worry about, and you know, I listen to Dax and I listen to Gonzalo, and I have a slightly different perspective on some of these things because I'm old school. You know, I grew up and practiced as a private sector lawyer for many years, advising clients on these things and worrying about how you maintain your business and competitive advantage in the face of some of these threats, which are no doubt financial imperialism by the old guard. You know, questions we have to worry about, at least I worry about it, not for myself but for others, is who's going to pay for this new world of increased reporting and compliance. And we know how the compliance industry built up after or the AML and the KYC, and that was a fairly significant cost that the clients paid for in the end. It was great for people in compliance, which became a major growth industry and will continue to expand dramatically thanks to FATCA and son of FATCA. I also worry about what happens to legitimate, and I know that the pejorative term is bank secrecy, and that's a debate that's, you know, we can put on one side. But there is a fundamental right to privacy which is attached to the rule of law, which means that your confidential information, whether it's medical records or bank records or financial records, should not be available and disclosed by third parties without you knowing about it and in legitimate circumstances. And the EU, at the same time as people get very worried about data protection, particularly in this electronic age, about disclosure of confidential information, medical records particularly, also, of course, financial records. And a fair amount of time is spent quite correctly by countries and the EU in developing data protection laws and saying these are the standards you have to meet. And that's fine, but they seem to miss the point that financial records privacy is actually all part of data protection, and that we do need to keep a balance. Obviously, where there is evidence, legitimate reason for that information being disclosed, that's fine, but where you draw the line is sometimes rather difficult. I also worry about what's happening to legitimate tax planning, legitimate succession planning, asset protection, and all the things that we're very familiar with in this room. Because going back to the point about lack of clarity, if we are now talking about tax avoidance being bad, that is a significant shift in the nature of the playing field. And I worry about that because it becomes extremely difficult to deal with, and everybody has to make their own decision in terms of what constitutes legitimate tax avoidance and what's illegitimate tax avoidance. It used to be dead simple. If the law allows you to do it, the old cases we know about governments not being entitled to dig their shovels into your assets and everybody's entitled to plan their affairs in the most tax-efficient way goes out of the window. I also worry about whether we can actually trust our governments and these various international bodies that are obtaining more and more information about us, and how we lose control of that information, particularly in the electronic age. I also worry about what the next step may be from all of this new move to exchange of information on an automatic basis. I feel very sorry for the bureaucrats who are going to be getting all this information and dealing with it, because, as we know from talking to tax authorities in various parts of the world, and that may be the next step, is until you have a tax identification number or some means of identifying that person other than on a form that's filed by a bank in Cayman or the Bahamas or somewhere, making the next jump is very difficult for tax authorities. So I see that as being extremely burdensome, and that leads on to the question of the idea of people developing a global tax identification number. That worries me. It also worries me that, and I haven't got it up there, that we may see greater and greater moves to imposing exit taxes, not necessarily stopping people leaving physically, but introducing taxes that make it more and more difficult for people to leave a jurisdiction and go and live somewhere else. We know the US has gradually introduced various forms of exit taxes. The Canadians have. The British haven't really yet, but maybe that will come. I also worry that the next step will be not only exchange of information, but also extension of agreements to enforce foreign tax judgments, which is sort of on the minds of lawyers, if not on the minds of anybody else. And the last one is whether all of this is going to produce significant moves of people and businesses, and whether there are opportunities for offshore financial centers in all of this, that the more burdensome you make it for people living and doing business in jurisdiction A, the more likely they may be to move. And the question is, where are they going to move? So I think it's incumbent on offshore financial centers that wish to succeed and expand their business to make it as easy as possible for legitimate businesses and people to move there and to set up businesses and to live and work, etc. And I think that sometimes proves a challenge for these smaller economies. So those are the things that I'm thinking about and I'm worrying about. And I'm now going to let Professor Morris let you worry about some even more things. Thank you.
So normally, it's very dangerous to ask a professor to speak at a conference with non-academics, because we tend, 10 minutes is enough time for me to clear my throat. It's not really enough time for an academic to get going. But I want to talk about sort of where this might go and give you a little bit of a framework for it, assuming I can work. So states are essentially competitive firms, right? Governments compete for resources. They compete just like private firms do, and private firms compete across multiple dimensions. So they compete on price, quality, and service. Governments do as well. So that what they're competing for is to lure businesses to bring wealth-creating activities to their jurisdiction so they can get assets, tax the assets, and provide services for their citizens. If you're familiar with Michael Porter, the Harvard Business School professor who's analyzed how firms compete, he's also applied this to governments. And so firms can compete by being a low-cost, broad market firm. So can governments. So you might offer a cheap incorporation facility and provide good service, and so draw lots of incorporation activity. So Delaware in the United States has pioneered this. You might compete by having product differentiation. So you might have some sort of a unique product. So we see this in the offshore world with segregated portfolio companies and things like that, offering something that's not elsewhere. Or you might come up with a product that's geared to a particular product, narrow market segment. So governments are doing this to compete for revenue to fund the goods and services for their voters and their residents. And they don't like competition, just the way firms don't like competition. Why don't they like competition? No one likes competition because it makes you work hard. And so the economist J.R. Hicks, in 1935, he said the best thing at all about being a monopoly is the quiet life. It's not stressful and so forth. And so governments don't like it when other governments compete with them. And that's one reason that the UK and the US and the EU don't care much for offshore financial centers, is it makes them have to work harder. Governments like the U.S. can compete with offshore financial centers. So Vermont has become a very competitive jurisdiction for captive insurance, but it had to work hard, and that's uncomfortable. If you don't have to compete, you can sell things that otherwise you might not be able to. So governments like to sell benefits to special interest groups through the tax code and through regulatory provisions. We don't hear much about this in this debate with the NGOs, but this is a really important thing. So if you just look at a measure of complexity of the U.S. tax code, the CCH Federal Tax Reporter was 8,200 pages in 1945. It's now 73,000 pages in 2012. And that is because the tax code has gotten more complicated. And it hasn't gotten more complicated because it's become more sophisticated and more clever. It's gotten more complicated because special interests got provisions that make their life easier. And simplicity in a tax code, which is what makes tax planning possible, what makes it possible for people to know what their obligations are and to order their affairs, is essentially a public good. And public goods, as we all know, are underprovided. And this is something that, again, the U.S. government and the EU and the UK and so forth don't like, the fact that their complicated tax code is unappealing, and so people move their affairs to jurisdictions with much simpler tax codes. And when I say sell, I mean sell. There were $74 million in contributions to members of the House Ways and Means Committee in the U.S., the Tax Writing Committee, in the 2012 election cycle. This is a direct sale. This is not something sophisticated and complicated. It's a little better than bags of cash. They wouldn't have been counted in this, but this is from OpenSecrets.org and the Trax campaign contributions. So no one's giving money to these people because they're nice people or because they believe in good government. They're giving money because these people are selling tax benefits. Now, those tax benefits are not worth as much when OFCs are competing, and so these organizations would like to stop that. Tim mentioned the budget crisis impact. I think that's quite important, and you also need to remember that it's not actually necessary to raise revenue for anti-OFC measures to be useful. All you have to do is predict that you're going to raise revenue. Because then you can spend the money, under at least the U.S. system. We predict that we will raise this much next year, so we can spend it. And when we don't raise it, well, that just means we need more legislation to predict that we'll raise more next year. Now, competition is a limit on these sales because the special interest tax expenditures and regulations are costly. And they're costly in a number of ways. One is that economists have found that roughly a 10% increase in the reliance on direct taxation relative to indirect taxation will reduce economic growth by about 0.39%. That's a fairly significant amount, and will also reduce foreign direct investment inflows by about 0.57%, and that's quite important as well. So when we see organizations that purport to care about poverty advocating for developing countries to adopt increased direct taxation, and we should keep in mind that that is likely to have the impact of increasing poverty rather than reducing it. How do we level the competition if we want to try to do that? So what do these governments do? And all the things that Dax and Tim described, I think, are about raising barriers to entry for your competitors to give yourself an advantage. And that's a key part of how firms like to behave. It's also a key part of how governments like to behave. So if you think of FATCA, FATCA is almost a pure barrier to entry. It imposes on competitors of U.S. financial services firms requirements that are not imposed domestically on U.S. financial services firms. So it means a reason for you not to take your business to a foreign jurisdiction, but to do it at home. And if we ever tried to apply FATCA in the United States, it would be repealed immediately, because U.S. financial firms would not stand for a minute for the burdens we have imposed on the rest of the world. And Alison Christians, who is an excellent tax professor now at McGill University, this is a quote from a article she wrote for the Cayman Financial Review in the most recent issue, which is on the table in the back. But she basically points out that the best that a foreign government can hope for in getting information exchange with the U.S. under an intergovernmental agreement based on the FATCA model intergovernmental agreement is that it will get on the list of countries with which the U.S. will exchange portfolio interest-related information on an automatic basis. That's the most you can get. Now, you have to give us a lot to get on that list. There's one country on that list right now, and that's Canada, which was already doing the exchange to begin with. So the U.S. is willing to offer almost nothing in return for FATCA compliance. We make huge demands. This is all about imposing costs. This is all about making it not worth moving your business to Cayman or BVI or Hong Kong or Singapore. And what this does is it creates what we might call a bootleggers and Baptist coalition. My friend Bruce Yandel wrote an excellent article about this back in 1993 that the Cato Institute published. And if you're familiar with the American South, you know about dry counties. So a local option, a county can vote to ban liquor sales on Sunday or entirely. Bruce asked, why is it that we see this phenomenon? Who wants to ban liquor sales on Sundays? And he said, well, there's two groups. One are the Baptists, who don't believe in drinking, and the other are the bootleggers, who don't like the competition from legal liquor sales. And so what you get with the Bootleggers and Baptist Coalition is you get a high moral purpose provided by the Baptists, and you get the bags of cash to the legislators provided by the special interests. And that's exactly what we're seeing with these sorts of regulations. There's a high moral purpose. We can talk about poverty and inequality and so forth, and that gives the legislators something nice to talk about, and then the bootleggers are the guys who come in with the bags of cash and buy the votes. And that allows the legislature to both profit and seem like they're nice guys. The OECD efforts on this, it's worth reflecting that in the 1970s, the OECD Tax Office was a small office that worked on double taxation treaties. It wasn't particularly prestigious. It is now its own directorate, and the director gets to go to Oxford and participate in conference and enjoy a greatly enhanced staff and tax-free salary, as Tim pointed out. And I have a paper with Lotte Moberg looking at the evolution of the OECD's participation in this, and really it can be explained as the self-interest of the people at the OECD who were much better off after they started meddling in taxes. The original purpose of the OECD, of course, was to foster economic growth, not to increase tax collections. So I'll leave you with this. These are just some, I can't resist self-promotion. These are some citations to my work in this area that will elaborate at greater length on all these points. They're all available if you just Google my name and the letters SSRN. You'll find them on a free website. Thank you.